Folks, I have some good news for stocks. I also have a little bit of bad news in this video I want to share as well here today. Let's just jump into it. I got a bunch I want to talk about here today, okay? So in regards to the market, huge day again for the markets. This is the best day for the Dow since, listen to this, 2020. Since 2020, this is the best day for the Dow. Biggest point move upward there. 800 plus points, just a massive day. NASDAQ had a really good day, up over 1.5%. S&P 500 over 2% move. Russell over 2% move as well. Bitcoin's doing well. Ethereum's doing well. Everything just pretty much a lot of green out there today. A lot of green. Now, this is amazing news, okay? Now, the reason this is amazing is this was kind of, a lot of folks said this was going to be a bad day for the market, right? And the reason being is yesterday we had a huge reversal, right? A huge reversal where the market tanked at the open. The market was just going down and down and down. It looked like it was going to be a horrible day that everybody expected. And then we turned and the market ended up finishing up. I think the NASDAQ was up like 3.3% or some insane number, right? It was like one of the biggest turns in the NASDAQ in the history of the NASDAQ. Incredible. But what everybody said, or at least a lot of people said, was, yeah, that's fine. That was just a freak one-day event. Just wait. Friday, the market's going down big. And then all of a sudden today, the market doesn't go down big. And actually, we have not just a green day, but an extremely green day where the Dow has its best day since 2020. Just an extraordinary turn in the markets here. And so if you're thinking about kind of the markets, you know, it can't be any better than this. Let's just put it that way. It doesn't get any better than you expecting to be massively red and the market turns massively green. So that is very, very good news. And I think this is big for the psychology of the market right now. By the way, just real quick, I forgot to announce this at the start. Stock Market Investing Mastery. I'm making that course free right now. Obviously, a very volatile market. A lot of people looking to get involved in the market. I think it's a great time to, give a little bit of knowledge out there. So if you've been in the market for less than 2 years, you should get a lot of value from that. Check out pinned comment down there to access that absolutely for free. Okay. Now, we want to talk about a lot of individual stocks here. Square, PayPal. So Square, massive day upwards today. Look at this, 26% move. Yesterday, around the open, that stock opened yesterday at like $82, $83. I mean, my gosh, you know, anybody that was picking up these shares, anywhere near the open yesterday, and even as the stock climbed to the 90s, I mean, my gosh, you got a deal steal. So congrats to anybody that has bought Square in the past week or two. This stock has just gotten way oversold. They reported really good numbers. I looked at their metrics. I still got to listen to a conference call. We didn't have it quite up on Hungry Bowl last night, so I'm going to listen to a conference call through that. More than likely tonight. Last night I got to listen to Beyond Meat, and I'll get into Beyond Meat in just a minute. But Square, so this is good news for PayPal. So if you're a PayPal shareholder, be happy at this as well. You know, at the end of the day, these two companies compete. Obviously, the Cash App competes kind of with PayPal and PayPal and Venmo a bit, which obviously PayPal owns, right? So they're a bit of competitors, but just to be honest, usually if one of these companies is doing good, the other one's doing good as well. Okay, that's just kind of how it is. It's kind of like, a rising tide lifts all boats. That's a very similar situation here. And so, this obviously pulls PayPal up here today, 4.6%. Those are my two best stocks on my entire watch list here today, Square and PayPal. So some good news finally for PayPal if you're somebody that's been buying the stock, right? And finally have some good news. I kind of don't mind if the stock does continue to downtrend, though. I would love to just continue to buy PayPal shares for the next, 3 to 6 months and just continue to build out the share. So I'm actually hoping PayPal stays down. We'll see what happens. A lot of what, as far as PayPal's stock price, what that's really going to be dictated by in Square kind of moving forward over the next couple months is really based upon the indexes, because these are part of the indexes, PayPal even more so. And so however the indexes move, PayPal and Square are going to move heavy in whatever direction that is. But yeah, both those stocks have gotten way too heavy as sold off. It's ridiculous. PayPal was under $100 the other day. Square, under $100, hitting 80 something. Both those stocks are just tremendous value. And if the market changes quick. A few months ago, you couldn't find any large caps or mega caps that really look like attractive values. And now they're all over the place. And PayPal and Square, even today, Square at 119 and PayPal at 110 is still a joke. I mean, just a complete joke. Those stocks will be, several $100s a few years from now. So, it is a market we're in. I'm kind of actually hoping this baby stays a little low there, okay? Now, I want to talk about 5 different stocks here. Okay, first off, Foot Locker. So Foot Locker, the worst stock on my watch list. This is a stock I own in my dividends account. It's treated us pretty well, but today a massive downward move for the stock, about 30%. So there is some bad news in regards to Foot Locker. Okay, the bad news in regards to Foot Locker is Nike's going to sell them less products moving forward from what the management team says. Now, I've got to listen to that earnings call because I want to hear more details about this. I want to know, is this a situation where Nike's selling them maybe less clothing products, or is Nike taking away shoes, like or any sort of shoe business away from them? I think that would be not just a horrible decision for Foot Locker, but a horrible decision for Nike as well. It looks great for Nike on paper if they can, sell at full price on their website or whatever. But the branding they get and the exposure from Foot Locker and the massive amount of stores Foot Locker does and how well Foot Locker does the product placement inside the stores, it's amazing for branding. So, I think it would be a really bad thing if that relationship really soured in any way. It just doesn't make sense because both companies really thrive because of the others. And so I'm going to listen to a conference call. This is where it's important to get more into the details because, I looked at all the headlines and they said, Nike's supposed to sell them less product over the next year. And Foot Locker's guiding for comp store sales to be down. They're guiding for revenue in general to be down in 22. But I want to get into the nitty gritty. I want to know what are the specifics in that because that could mean a lot of things. Does that mean Nike's going to sell them less, hoodies? Does that mean Nike's going to sell them less, jogging pants? Like what does that mean? Or does it mean they're not going to get the newest shoe drops or less shoes? That's the very, very important part. Are they not going to get certain kinds of Jordans? Like that's the important part that I'm going to have to get into the nitty gritty when it comes to Foot Locker there. But yeah, massive move down for Foot Locker. And, this wasn't one I could buy today just because I got to figure out the details of what's going on there. Because if it's like, Nike's going to take away a bunch of shoe business, that's really bad news. If it's, something like they're just, going to sell them less clothing items, not nearly as big of a deal. Okay. Beyond Meat and Tattooed Chef. So Beyond Meat, they reported their last bad quarter last night, essentially. And, 2021 was just a horrible year for Beyond Meat. But 22 is going to shape up to be a very good year for Beyond Meat. And I actually expected the stock to be a beast over the next 12 months. They're setting their numbers up really good. I think Q1 is going to be incredibly strong. And I think all throughout the year, the numbers are going to get stronger, actually, as the year goes throughout for Beyond Meat. And I think that stock sets up in a beautiful position for 22 and beyond. So this one I'm looking at, right? It fell big today. And it actually brought down the chef as well, because some of the numbers weren't what folks were looking for, which, it isn't a surprise to me. Like the 2021 is just a disaster year for Beyond Meat. So, of course, their Q4 was going to be a disaster. From here on, now the comps are so easy and they have so many revenue growth opportunities over this next year or so. Like, Beyond Meat's going to smash it. But, it pulled down the chef today, 5.9%. Now, there's good news and there's bad news with that, right? So, first off, the bad news is like, people are looking at it like, what the hell, man? Freaking chef has to go down because stupid Beyond Meat goes down? Well, yeah, okay. So that looks bad news for today. But imagine as Beyond Meat starts to beast mode, which I think is going to do over the next 12, 18, 24 months. As that stock starts to rise and have great green days, and all of a sudden Beyond Meat has a 9% upward move and a 15% upward move, and as that stock starts to move in the right direction, guess what's also going to happen? It's going to pull the chef with it. So you can't have it both ways, right? You can't have it where it's like it only affects it on the upside and doesn't affect on the downside. It doesn't work like that. And the really good thing with this is I want to see these stocks starting to move a little more as baskets. That would show, and I think actually this is going to happen in the next 12, 24 months, okay? I think there's going to be ETFs, and things like that even created just around the plant-based food movement and all the innovation there. And I think they're going to group stocks like Beyond Meat, Tattooed Chef, Oatly, and those other stocks together. A lot of these companies just went public in the last few years. And I see that as being a big opportunity where folks that want to play the plant-based food space but don't want to specifically pick individual stocks end up investing in that. And a lot of institutions and funds end up doing that rather than saying, I think this company might be the big winner and this one might not. They just, semiconductors like that. There's a ton of, like almost every industry, every major industry is like that. And I think that this plant-based food movement will be the same exact way. And so, yeah, it hurts on a day like today where it's annoying because Tattoo Chef had no news and it was a green day in the market, and to see that stock down 5.9% is extremely annoying. But believe me, it's kind of like short-term pain for long-term gain at the end of the day when it comes to that situation there. Palantir, I did keep an eye on this one today. Went down 3%, but that was after an epic day yesterday where that one opened in the nines. I think it was like 970 a share. And next thing you know, it finished a little under 12. Like, that was just an epic day. So that one kind of pulled back there. Oatly. So Oatly got pulled down as well because of the Beyond Meat move down. That did pull down Oatly. But like I said, that's a short-term pain for long-term gain at the end of the day. And I think, what these companies will have going good for them over the next several years as more money funnels into them, it's going to be a game changer for these stocks. And these prices we're getting today on these stocks is, just to be quite frank, a joke compared to where it will be 2, 3, 4 years from now. Voyager Digital pulled down today 1%, and that's because of Coinbase, essentially. Coinbase numbers were great. I mean, great numbers, but, people don't want to own crypto brokerages right now. Wall Street still is having trouble believing in crypto. A lot of Wall Street is, and on top of that, there's a lot of competition in this space, right? And so even though Coinbase's numbers were ridiculously great, like that was one of the best earnings reports I've seen this entire earnings season, Coinbase did, it just, no one wants to own those stocks right now. And at some point that's going to change, but right now that's just a market we're in right now, okay? Now, don't get too excited about the whole Russia calm down. We've had 2 great days in the market, and I understand that, but don't get too overly excited about this, because remember, when you're in a situation like this, bad news can come out in a snap of a fingers. And why does this guy's head look too big for his body? Like doesn't that look like they put a fake head on him? Like, what is going on here? Like, that's strange. But anyways, don't get too excited. You could always get more bad news out of this. There's a fierce battle going on, obviously, in Ukraine right now, and there's real worries about capital cities being taken. So that's a whole situation, So I'm just going to tell you, there's going to be a lot of news that comes out over this weekend. And based upon that news, that will likely be what moves the market on Monday. And I can tell you, after 2 great days like the market had over the past 2 days, the market's going to be looking for anything to push it down on Monday. Anything. And so if there's anything out there, the market will find it over this weekend, essentially. Now, I saw this video. Former Ukrainian president is on the streets with a rifle. I was looking at this. I was like, man. Sometimes I don't think we realize how good we have it in the States. Like, I know people in real life that have better weapons than the former Ukrainian president, like in Arizona alone. Like, it's just crazy, man. Jeez. This I saw, new SEC short sale rules would force investors to submit updates each month. I think the market likes this. I don't think this is like game-changing news, but with everything that's been going on with short sellers and, behind the scenes type stuff, I think it's an important step in the right direction, at least as far as that goes. But, when I looked at this, I was like, I don't know if this is really a game changer, just to be honest. Like, now you have to submit updates each month. I looked at the details of it and I was like, I don't think that's a game changer. Yeah, it's a step in the right direction, but I don't think it's really, quite a game changer there. That's just my opinion there. Now, you want to find the most volatile thing in the world to play right now. It's the Russian stock market index, okay? I tried to go to their actual website, but I think their website's like shut down right now or whatever. I literally couldn't even get on it. I clicked it several times. So I don't know what's going on with Russian-based websites right now, but it's not looking good. But in regards to the market, so yesterday, the Russian stock market fell, I think it was like 35% or some insane number. Like, could you imagine, like what we went through in 2020 was insane, right? Because the stock market fell 35% in 22 trading days, which was ridiculous. But this market fell 30+% in one day. Like, that's just crazy, right? But in terms of this, it's just, this is like the most volatile thing I can find pretty much in the whole market. This makes even most stocks look like child's play when you're talking about 30% plus downward move, and then a 20% upward move. And it does make me think, who was playing the Russian stock market today? Was that Russia in there? Was, could U.S. funds have been investing in this? I don't know if they're even allowed to right now with everything that's going on, but when you see the market go down that much, like 30+%, it's such an insane number that, I wouldn't be surprised if international funds or hedge funds and folks looked at that and they're like, I see a little bit of an opportunity here. Let me go ahead and buy this up. So I don't know, but that's just crazy. I think this is a fun one to keep an eye on, the Russian index, okay? Now, in terms of going into next week, kind of how I think about this and whatnot, right? I think, at the end of the day, if you see great deals in the market, you got to take advantage of those opportunities, regardless if you're scared the market might drop more or whatever's going to happen there. If you see a great stock that you love over the next 3-5 years, you got to take advantage of those deals. A lot of times when the market starts to turn green, and like I said, we had 2 back-to-back really green days, you get some folks start to think, hey, you know what? I think we're going to turn red, so I'll wait to buy, right? And so they kind of wait, and then they're waiting. And I watched this happen in the March of 2020 crash, where the market, obviously tanked off a cliff, and then it started to come back in the back half of March. And as we went into April and May, and a lot of folks didn't buy anything. They sat on their hands, and even as we went throughout the summer, because they're like, well, there's still a lot of bad news. We must go back down, right? The market's usually jumping out in front of things. So the market likely already prices in a lot of Fed rate hikes. It prices in even, the Russia-Ukraine situation. It usually does these things in advance. And so as you're still going through the bad news, a lot of times the market can move up, even though you still got a lot of bad news that's coming out. And you're like, how are we moving up right now? And I watched the same exact thing play out. My first couple of years of investing, 2008, 2009, I watched this play out. March of 2009, market bottoms, right? Market bottoms, and then we start trending up. It was either February or March of 2009. I can't remember. I think it was March of 2009. And so we bottom out in the markets, and the market starts moving up. Now, meanwhile, we had so much bad news going on with the economy. It was still like bad news on top of bad news on top of bad news. There was nothing good still at that time. And the markets just kept moving up. And people are like, do you see the unemployment rate? Do you see all this bad stuff going on? And the market was just doing its own thing, and it was just kept moving up. And people are like, what the heck? And then slowly, as we got through 2010, the economy started getting a little better, slowly but surely. Things started improving. Corporate profits started improving. Companies' guidance started improving. And then we were off, as we just kind of went on along. And people are like, man, what just happened? And then we had a kind of a double dip recession fears in 2011. That might even have been 2012 a bit, but it was really like 2011 where market actually fell. And people are like, look at all the news. Like, we still got a lot of good news out there, and the market's falling. So sometimes it's really hard to make, justify moves the stock market's making, because a lot of times you're looking at it from a perspective of what's going on today in front of your face, rather than what could be going on a month from now, 2 months from now, 3 months from now, 6 months from now, which the market's really looking at. So anyways, guys, hope you enjoyed this video. As always, much love. I appreciate you joining me. Don't forget to subscribe to the channel. And also, if you want that free Stock Market Investing Mastery 11-part course, check that out. There'll be a pinned comment down there. Much love, and have a great day.